So pumped because we've got someone that's got a pretty high IQ with us tonight to talk to us about the economy, to talk to us about real estate. The great Stephen Koukoulas, who has been an economist for two of the big banks and also an advisor to a prime minister. And you probably hear him quite often coming on media. How you going, Stephen?
I'm going really well. I'm doing well. Thank you.
Listen, you first got my attention because you put your neck on the line and you said, hey, listen, I'll pay you 6-1 to a guy by the name of Martin North. It was about 2 years ago. The market wasn't going great at the time, I will say, and there was no indication at all that the Liberals would be in government in the future. And this guy, Martin North, I forget what organisation he's with, but it doesn't matter. On 60 Minutes, he went out there and he said, real estate prices are going to drop by 45%. You said, that's bullshit. I'll have a bet with you. In fact, offered him 6-1. And the way it looks, Stephen, you're going to cash in next year. That's when the bet's finish, because prices not only did not go down, the way they're tracking, they've gone up.
They'll go up from that time of that bet. And look, when the bet was made, the market was soft. As you said, we'd had this bit of a soft patch for a couple of reasons. We'd had a supply side lift in construction. There are a lot of CBD apartment blocks going on around the country. This is about 2.5 years ago. And I saw that on 60 Minutes. It occurred to me, I thought, no, that's really a damaging and irresponsible thing to say. We can have a debate about house prices every day. I'm all for that, don't get me wrong. But when you come out with a number of minus 40% and you scare the pants off people, you really make them worried about the house that they own or whether they're going to buy, and they hold off from buying, you create a real problem, not just for the housing market, but for the economy more generally. So I sort of made that offer to have a bet and said, well, look, the fundamentals on the economy are not that bad. Affordability is not that bad. When you put your interest rate number, and again, this is prior to these rate cuts that we saw in the COVID crisis, you put your interest rate number into your mortgage calculator, you look at the amount of money you can borrow, you look at the average house prices, you could have a fairly educated guess that, okay, prices weren't going to go gangbusters, but they were going to be reasonably well supported. Now, they started picking up, as we know. So in that period, just prior to COVID coming along, Melbourne and Sydney year on year were up about 10%. They were really going well. Along came COVID. Nobody could forecast that. But lo and behold, we had a bit of a lull. Sales volumes were down. Prices in Melbourne did fall about 5%. Sydney, they came off 2 or 3%. And now when we've got the lockdowns ending, we've got better news, and this is just aside from the Sydney information in the last couple of days, we had prices rebounding in every state and territory capital city. They've gone up as the economy's recovered and we've opened up our domestic economy. Interest rates are really low. You can borrow at ridiculously low levels of interest rates. Housing is looking a whole lot better, and that 40 to 45% forecast looks sillier now than it did at the time.
Now, Stephen, I want to ask you, and by the way, everyone that's watching this now on the stream, I'm letting you know that this guy here, highly intelligent, he works with data, he's an economist. You've been an economist most of your life, Stephen. Is that what you've done?
Yeah, look, I did my economics at ANU here in Canberra 30-something years ago, too many years ago, and I've been really lucky with my professional career. I spent a bit of time in the Treasury, so I was there when Paul Keating was Treasurer and all the rest of it. Moved to Citibank and did a lot of economics with financial markets. Went to London and did a bit of head of global research there. Bit of time with Prime Minister Julia Gillard. That was an interesting period back in the time when she was PM. And then in the last 10 years or so, I've had my own little business. And that's been really good fun because I can pick and choose what I do, what I analyse, and the clients that I speak to. So no, I'm very lucky with my career. But housing, we're Australians. It's a dominant issue in our economy.
Now, I want to ask you, you talk about interest rates. Your view on rates in in the future, like 2021, 2022? What's your feeling?
Yeah, look, they're low for a long period of time. Don't take my word for it. Listen to what the RBA governor, Philip Lowe, said just a couple of weeks ago. He was asked at one of these committee appearances that he has before the federal parliament. He goes there twice a year, and they grill him, as they should. You know, he's the central bank governor. He sets interest rates for you and me and everybody else. And he said that interest rates will, not might, will remain at the current low levels for the next 3 years, which the time that the Reserve Bank are judging it'll take to get the economy back to full employment, before we can get decent wage increases in this economy, and before inflation goes back into the target range for the RBA. Remembering that they target inflation between 2 and 3%, it's currently 0.7%. So they're a mile away from getting the economy with an inflation rate to justify a rate hike. So look, I think in the next year at least, rates will stay where they are. Now, there's always a caveat. The RBA is made up of mere mortals. They sometimes get it wrong. And, you know, they might be wrong. It's a bit early to say just yet. But if they're wrong and they bring forward that 3-year time horizon for no hikes, and that say in 18 months' time they do have to hike rates, an important thing to remember, they will only do that if the economy is going really well. They're not going to do it for fun. It'll only be because the economy is well. And if the economy is strong, the property market's probably going to be as strong as well. So yeah, in a couple of years, you might have to pay a slightly higher interest rates, but it'll be because things are going very well.
Okay. Put you on the spot here. What's happened all out of the blue in the matter of 48 hours? Bumpy roads, particularly those in Sydney. But the impact is going to be broader than Sydney now, with holiday travellers going to Queensland. Queensland's closed the borders. A lot of places closed the borders. I mean, part of it is a health issue and part of it is an economic issue. I want to ask you, what do you do in a scenario like this, based on, you know, what we've seen in the past, based on your reading, your intuition? What do you do, Stephen, now? Do you do something drastic, very short term, or do you sort of, just suss it out as it goes?
Look, it's a really difficult one, and I don't begrudge the people who make those decisions. It's a really tough call. Of course, we've got to contain this health problem. We don't want it to get bigger than it need be. We just have to look at the US, look at Europe, look at the UK to see how bad this COVID crisis can get in a health sense if it's not well contained. The number of people who have got it and die is an absolute human tragedy. So we saw a mini example of that, and I don't mean to downplay it, a mini example of that in Victoria a couple of months ago. And while it must have been a really hellishly tough decision for the Andrews government to make, they decided to lock things down. And being locked down for 12, 13, 14 weeks was tough on a lot of people. Their mental health issues were compromised. The economy fell into a screaming hole in Melbourne. However, they've had more than 50 days now without COVID. They did open up. And if you look at the Melbourne economic data since the opening up 2 months ago, it's been very strong. So that output that was lost when things were locked down has been regained when they opened them up. So Sydney, gosh, this is where we're going to be watching, Gladys Berejiklian's press conferences every day and the health minister to see exactly what's happening there. My view is it's best to now, look, you keep the economy going when you can, but where you must shut it down, you must shut it down. So my hunch is that's how they're going to err on the side of making sure that we don't have this health crisis becoming something bigger that has bigger economic consequences down the track. Try to contain it now. Leave a few things open if you can to keep a few people at work and the economy doing a little better. But I think that's going to be a really tough challenge for Sydney in the next, hopefully the next few days, possibly the next few weeks.
So on that issue about work, it's an interesting one because I know that you've got a view about working from home. There has been in the last couple of weeks, and even a lot of the couple of the organisations that I'm involved in, News Corp, realestate.com, have sort of said, hey, listen, some of you have to start coming back to work. You're not going to come back all at once, and you're not going to come back every day, but Zoom and Skype from home 5 days a week ain't going to happen. Now, what do you think? Stephen, because this affects
Yeah.
real estate. And the reason I say it is that there has been this sort of mini boom in regional Australia, because whether it's Byron or whether it's the Central Coast or various other parts of Australia, certain workers have thought, you know what, I'll sell my $2 million house, I'll buy something for $1 million, and I'm going to have a great life living, tree change, sea change. But is that going to be an option for people, or do you think, hey, come vaccine, nah, forget all that, you're all back at work?
Yeah, look, I think we have changed, and that there'll be more working from home in the future than there was prior to 2020, prior to COVID coming along. Now, that doesn't mean nobody's going to go to the office ever again. No, we will be going back to the office. We will be, communicating and having the benefits of face-to-face contact, of different meetings, and an ability to hear what's going on in an office environment. I've worked in offices for almost all my life, and I can assure you, you do get a better vibe, a better feel when you run into someone at the coffee machine. You go down for lunch and, what are you going to have? And you have a chat about a work issue and you resolve an issue with that face-to-face contact. However, I think what we've learned too is that both employers and employees can be trusted to work from home. One of the issues when the working from home issue was being discussed is, people are just going to goof off. They're going to do nothing. They're going to go for walks and pretend to do some work. But no, people are they're pretty conscientious. They want to get their work done. Their bosses know how much work they're doing, so they can't sort of goof off and do nothing. So I think we've learned that, I can work from my home office, if you like. I can do my work very efficiently. I'm actually saving the commute time. So if it took me half an hour in the olden days to catch a bus or catch a train into the city, walk from the station to the office block, for me, the commutes from the bedroom to the kitchen to get my coffee in the morning to my desk takes me a minute. However, so I think some of it's changed, and that will have an impact, as you said, on regional prices. Why do you need to buy a really expensive place close to work in the CBD when you can work in a regional area and buy a property that's half the price and be just as efficient? So, this is a slightly longer answer than I'd probably like to give, but we will still have to go into the office a couple of times a week for that contact, to just have those important face-to-face discussions. I think that's still going to be important, but increasingly, some proportion of the office workforce will be able to work from home.
Look, I can tell you in my own life, I know that, there are certain conversations in the corporate world where you actually feel more comfortable about having them face to face. Sometimes you have them by the water cooler or in the corridors. You don't even actually have it in front of a lot of people in a meeting. Stephen, sometimes I get paranoid that I'm going to be on a Zoom with about 10 other people and I'm going to say something and someone's going to pull out an iPhone and tape what I've basically said and then go off and say, oh, Tom wants you made redundant, mate. Look at this.
And in an office, you overhear other conversations, not in a nasty way, but you're sitting there, you're tapping away and you hear a couple of your colleagues talking about a work issue or work problem. And hey, you said something that's really important to the project I'm working on right now. So I think the office contact is still going to be important, but the ability for some workers to work from home with a good computer, with a comfortable chair, with a secure login to the work databases and these sorts of things, that's going to be very important. I think the IT people will do well out of that. It's going to be some of the change is going to occur, but I think, as you said, there will still be a requirement as COVID's tackled, and we're not going to risk spreading it, to go back to the office at least a couple of days a week. And again, it's even to like the thing of conferences, something that I love to talk at. I've done, I don't know how many Zooms in the last 10 months, Zooms and Skypes and all these other conferences, and they're fine, they're good, but it's not the same as a face-to-face discussion with an audience and interaction. You share a conversation while you get your cup of tea at the morning tea break. They're really, really good. Like watching live footy or cricket as opposed to watching on the telly. Better to be there.
By the way, gang, and this ain't an advertisement, I can tell you that the Speakers Bureau that manages This great man is a personal friend of mine. Daughters went to school with my daughter, and she rates him highly, and I can see why. So if you ever need anyone to get up and do a keynote on real estate, economy, that is a person that I must say is probably a little bit more positive and optimistic about the property sector and is more passionate about it than, say, many other economic commentators, hit him up. And I'm sure that you also offer, in this current environment, the Zoom option at a lower figure, you know. Which
Indeed, Zoom's easy for everybody. And look, it's pretty good. Thank you for saying that, by the way. But you just sparked a quick memory from me. You know, Alan Joyce, the head of Qantas. Qantas got obviously smashed when we weren't traveling, weren't flying anywhere. You know, and in fact, I remember him being asked on one of the radio programs I was listening to, "Who's your biggest competitor?" You know, Qantas. You know, what's your biggest competitor? And people think, "Oh, is it Virgin or is it one of these new Link Airlines, one of the domestic carriers?" He said, "No, it's Skype and Zoom. If that takes off, half of my business travel will disappear." And that was Qantas's biggest competitor. So things are changing.
Well, look, I mean, the work that I often did traveling was work that was one to many, that it was a seminar for, realestate.com or News Corp. But often, Stephen, I'd be sitting at an airport or at an airport lounge, and if a flight was delayed, you'd get into a chit chat with someone. And I'd always curious how a guy from Sydney would leave, fly to Melbourne, have a 1 hour meeting, choose to stay at the Langham Hotel overnight anyway, have dinner, come back, claim the expenses the next morning, probably only, start work at 11 o'clock. And I used to think to myself, that's probably going to come to an end, and I think COVID clarity, as I call it, has brought to the organization's mind, hey, hang on a second, that meeting probably didn't have to get done by a face-to-face.
Well, I think that's what people are finding out. And for the bean counters, if you like, in the accounts departments of any big businesses, return airfare, flexible airfare, $500, $600, $700, a couple of taxi rides from the airport to the city and back, and a night's accommodation, as you said, all of a sudden you've got well over $1,000. And that person's out of the office for the bulk of the day too. Sure, their meeting's important, but the cost of a Zoom or a Skype is nothing, basically. And you can do it at the drop of a hat. You don't have to book a flight. The flight's not delayed. You don't have bad weather causing, all these other things. So I think that's going to be an interesting one when we do open up again. The bean counters are going to say, hey, we can do all these meetings for next to nothing, as opposed to, a good $1,000 plus for a day trip to Melbourne.
Now, JobKeeper, it's going to go, maybe it will hang around in some form, but a lot of this stimulus and grants looks like, I was, watching the news before, the builder scheme is being, taken away slowly, JobKeeper's going, holidays on mortgages are going. You've got all these things that at some point next year, appearing like March, that are going to come to a stop, or they're going to be greatly reduced. Is there something we should be worried about?
The government's planning to end all these things, as you mentioned, JobKeeper from the end of March, some of the other schemes that they had in place, which were stimulating the economy here and now, or certainly a few months ago, because the economy needed it. But I'll take a step back. I'll put my economist hat on for a minute. September quarter, seems a long time ago now, September quarter GDP was plus 3.3%, the fastest quarterly GDP growth rate for 50 years. Okay, that was after a minus 7%. So we only got back roughly half of what we lost. December quarter is going to be a strong number again, by the looks of it. From what we see from retailers, from housing, from even exports are doing pretty well. Look at the iron ore price. It's incredibly strong. So it looks like the economy has recovered, and it's recovered quite well. As I said, I'll put aside the caveat of what's going to happen in Sydney right now. That's a little bit of an unknown. But the ending of those schemes, they were never going to be permanent. They are too expensive, and they were needed at the time when the economy was right in the doldrums. When it was getting hit hard, the JobKeeper, the Job Seeker additional payment, the free childcare, remember we had a few months of that, the builders' subsidies, all these sorts of things, they would have stopped the economy from going into a Great Depression. Now, if the economy continues to recover as it appears to be doing, then we don't need that. That the economy will pick up the slack that will come about when these schemes are ended. It's a difficult juggling act. So Treasurer Josh Frydenberg, he's looking at these numbers every day. He and his team at the Treasury are looking at these numbers every day, seeing whether they can tweak it or not. Look, if the economy come the middle of February, say, is a bit sketchy, it's not doing as well as they were hoping, they'll probably extend it. But if we keep getting better economic news on the economy, they'll say, look, we'll bite the bullet, we'll end these schemes now. The budget, we can't run budget deficits of $200 billion a year. That's clearly unsustainable. We can't keep these projects going forever.
Okay. Donald Trump, like everyone had a view a few months ago, if Trump goes, economy won't be as good, but COVID will get sorted out quicker because one guy's about health, one guy's about business. That, in fact, hasn't happened. I mean, people have accepted that Biden will be running the place. I mean, that's obvious from the dialogue, even from Republicans now. But what's your view? Like, the markets seem okay.
Well, the Dow keeps hitting record highs every other day. It has a bit of a pullback, then it goes up even more than it lost. It goes up again. So the Dow is well above 30,000 now. The S&P 500 index is strong. Look, I think the markets are reasonably content, and without getting into the Trump versus Biden, delicacies, if we can call them that, at the end of the day, I think the US probably just needs a relatively boring president who's just going to get, look, and I think Trump did a dreadful job on the health issue. There's no question. He just sort of let it go, and we're seeing the consequences now. So if Biden can, have people wearing masks, social distancing, the vaccination comes out and can address that issue, then the US economy will well set up for 2021. Of course, there are issues about what he's going to do with tax policy, what he's going to do with some of the health payments and these sorts of things. And of course, they're expensive too. The US, talk about our budget deficit being bad in the US, it's multiple times worse than our budget position. So Biden's going to have a difficult juggling act too that Trump didn't care about. You said he was pro-business, and yes, he was, but it was with a massive ramp up in the budget deficit even before COVID came along. So not many people have focused on the US debt level. It's very, very high. So Biden, is probably looking at the health issue. Fair enough. I can't disagree with that. But he's also looking at then some of these issues that might be important in terms of who pays the tax in the US to cover the cost of healthcare, which of course is huge at the moment, and in terms of trying to repair the US budget deficit, which at the moment is really high.
Now, finally, coal exports are down. You don't think that it's a temporary thing. You think that it's probably going to be an ongoing thing. I want to touch on that. I want to touch on, China. China's going gangbusters, Australia managing that relationship. It probably means if they manage it well, it's a great thing for Australia, the way China's going.
Look, on the coal first. Oops, I'm sorry, my headphone fell out. Right. On coal first, it is a long run decline. Whether you're a coal believer or climate change, whatever, we do know that every major company in the world, other than the coal producers, every government's trying to transition to renewable energy, whether you like it or not. So I don't know the day that coal is going to be less and less important, but it's happening already. And the RBA had a lovely chart in their recent publication about the volume of coal exports, and they're starting to taper off. Not even to do with COVID, it was happening before then. So you'd say that the coal side of our economy in 10 or 20 years, without picking the exact date, will be superseded by the production of renewables and these sorts of things. But that doesn't mean that our relationship with China is changing. We sell more iron ore to China than any other commodity. They still want our iron ore. It's the high quality. It's cheaper to ship it. We're sort of closer than Brazil and some of the other places where they can buy it from. So that's going to continue. And we've got to remember that, okay, there's a tension going on between the Morrison government and the Chinese at the moment on wine exports, barley exports, beef exports. So there's a problem there. I think, again, without getting into the politics, Mr. Morrison may have rattled the cage a little bit when he was saying, where did this COVID problem come from Wuhan? We've got to have an inquiry into that. So I think he rattled the cage, and the Chinese were pretty annoyed by that. But so there's a few little risks there. But at the end of the day, we still have a third of our exports going to China. The Chinese authorities came out a week ago and said that their GDP forecast for 2021 is plus 8% for the Chinese economy. We in Australia would be mad to jeopardise that trade link. Now, whether it's coal or iron ore or wine or education exports from Chinese students coming to study in Australia, whether it's lobsters and mangoes and these sorts of things, they are a boom part of the economy. That middle class growth with people earning good incomes now, and they buy wine and these expensive dairy products and these sorts of things. We have got to put our economic as well as our strategic hooks into the Chinese economy, because that is how a country of 25 million people, Australia, can diversify its export base with another 1.3 billion people in China who hopefully buy our wine, our cheese, our lobsters, and our iron ore and things as well. So China's an important part of our economy. We don't want to jeopardize it.
Guys and girls, this has been Stephen Koukoulas. He's been an advisor to one of our past prime ministers. He's been a chief economist to the major banks, and I'm letting you know whether you've got if you've got a real estate event that's just for your real estate industry, being agents and that, hit him up. Is the best way to hit you up through Twitter or through an email? What's better?
Email's pretty good. It's Stephen with a PH at thekouk, thekouk.com.
Okay, well, we'll
the handle is at thekouk.
Okay, this email. So, Susan, what we'll do is put the email in the comments. Susan's in the background watching it all. And then in addition to that, when we send our email out, it'll have your email at the bottom, but also Twitter on a private message. So, guys and girls, what I can see is the way that you might bring in Stephen into a conference if you're having a consumer event and you want to have your vendors and landlords getting a bit of an overview of total real estate and economics, bring him in. Or also, Stephen, we have a lot of real estate events in the new year. They call them kickstarts. They get the teams motivated and pumped for the new year. Very sales-based business. Everyone's in real estate. You've got to be, totally motivated and hungry and aggressive and all the factors that have made you successful. Greek Australian background, loving property, life's good.
We're pretty lucky here, aren't we?
Yeah. Listen, you're in Canberra, right?
I'm based in Canberra, yes.
Okay. Life is good?
Life's good. We've been lucky through the COVID downturn. Funny old Canberra. Look, I like it. I'm here for family reasons. Mum and dad are here and they're getting a little older. I need to sort of look after them a bit. But Canberra's good. It's easy. It's a 3-hour drive to Sydney. It's a 45-minute flight to Melbourne. Hour up to Brisbane. It's easy to get around Canberra and to these other places. So I think I'm only a few hours away from anywhere in Australia, basically.
I'm trying to work out how would they Canberra, I think in the last hour or so have said no Sydney res. Is that right?
I've just been, it's a moving feast, that they have actually warned Canberrans from going to Sydney, Greater Sydney. My son's there, so I'm not going to be able to see him on Christmas Day, which is pretty sad. But, they're actually pretty strict here in Canberra on the COVID thing. We've not had any cases other than a few diplomats coming home, and they've all been in isolation. But there's no, what do they call it, community contact that's gone on in the last, I think 3 or 4 months. So we're pretty lucky here in Canberra. And, our health authorities have done a great job testing people, reinforcing, hand washing, staying away, and all those other things.
All righty. Stephen Koukoulas, thank you so much. Guys and girls, signing off. Thank you so much.
Thank you.